UBS has let us inside their Sydney trading floor. In this room, they turn over more than 3 billion Australian dollars every single day.
It's still vibrant and very adrenaline-y. Like there's still healthy discussions, let's say, and raised voices.
In fact, I can hear ka-ching sounds.
Yeah, so
is that people making money?
No, those different sounds reflect a different trade.
Okay.
So if you're a trader, you're using a whole lot of different instruments to hedge your risk.
I'll be honest, this is kind of what I was expecting. But UBS's trading floor in Sydney was far more sensible. And its leader, Michael Hendry, no Jordan Belfort. It's not very loud.
It's not loud, no.
Have you told them to be on their best behaviour?
No, it's sort of lunchtime, so
Okay.
it's a little bit quiet.
Oh, it's still pretty busy though.
Yeah. So there's 117 people on this floor across 3 main businesses. So our equities business, our fixed income rates and credit business, and a finance business, which does all our prime broking. This part of the floor, which sort of faces north down the harbour, is all of our risk, what I call our leverage business. So it's principal, so it's bonds, credit, FX, equity derivatives.
A lot of pressure on this side.
Yeah, there's a lot of pressure on the whole floor. There's a lot of pressure on the whole floor, and each trading hub has a sales team supporting it.
Okay, great.
So, responsibility sits with the trader to take all of the risk, and then the client servicing group works around, that trading business.
So the salesperson in each division, they're getting
Sales
inflow.
team, yeah.
And then it's the allocation that's being done by.
It's the risk part of it. The trading, making the price, is done by the trader.
Okay.
Yeah, so they're different roles. One's client-facing, the other's managing the risk. So it's a bit like if you go to a car yard, I guess. You meet the car salesperson in the car yard. To get the best price on the car, I go to the person that owns the car lot, who's actually buying or selling the car.
It's a great analogy.
Weird one, but anyway, I made it up at the time. So yeah, that's this side. You could, I won't mention the carpet, but there's parts of the floor that we can't
Please
go
mention
on.
the carpet.
I'm not going to mention the carpet. No, I'm not going to
But
mention
can you just tell me the rules so that I don't break it? And my cameraman doesn't break it?
Yeah, you're not allowed to walk on the dark carpet.
Okay.
But Jen will kill me.
Pale grey carpet
here,
only. I'll explain the carpet. Dark grey, no phones or cameras are allowed because there's sensitive market information on their screens. Light grey, we're allowed to walk and talk. Let's continue. It's getting louder. Is this like peak time? Post
I think
lunch?
maybe everyone might have been quiet for you.
Everyone's
Being
got a second
respectful.
coffee.
Yeah.
And in fact, I can hear ka-ching sounds.
Yeah, so
Is that people making money?
No, that's those different sounds reflect a different trade.
Okay.
So if you're a trader, you're using a whole lot of different instruments to hedge your risk. And by hearing that sound, you don't need to look at what's happened. You know what's happened.
So all senses are going.
All senses are going, 100%. So yeah, sound is a hugely important part of the floor, but particularly if you're running risk.
Well, how does that work when it gets really loud?
Well, that's more important. When it gets really loud, you hear that sound you're used to hearing over and above every sound.
What was that
so
one?
It's like,
beep, beep.
That would have been a futures contract trading. So yeah, a 5-year or a 10-year, or actually that's the equities derivatives desk. So it would have been a SPY,
You must be so sensitive to each one of those. You know exactly what they are.
Yeah, you can hear, and that's kind of what everyone's set up for, to operate when it's crazy, because that's when mistakes happen. And so it's a bit like a sporting team. You can train all you like, but in a grand final, the last 5 minutes, that's when the game's won or lost. So we try and hard code individuals to operate under stress.
And you're the coach then?
I'm sort of like, I'm the coach, sort of.
Head coach.
Just filtering around, just hanging around. Yeah, try not to get in people's way, actually. That's another reason I stay on the carpet. Yeah.
To better understand how the team operates, Coach Mike took some time off the floor to have a chat. Talk me through the trading floor operation. Like, what time do you come in? What sort of news do you and your team absorb first thing? How do you get across all these different assets?
Well, so our equities team are in probably earliest. Some of them get in at 5:30, 5:45.
Wow.
We have our first formal meeting at 7:30 in the morning. Actually, our Kiwi guys might get in earlier than that, but it's, first formal meeting at 7:30. next meeting at 7:45, and they're different meetings. One's a flow meeting, 7:30, 7:45 is research analysts, because those groups need to be segregated. We keep client flow away from different parts of the business. And then at 8 o'clock we have a rates meeting, which is far more macroeconomic, whereas the other two are equities, flow related, bottom-up research, and then we get to macro at 8 o'clock. So it's there's a lot of work done before they start, actually.
And they're handling a lot just in terms of funds across different assets as well. Talk to me about turnover and what flows look like at the moment.
So that's every asset class. So I'm responsible for three main businesses: equities, fixed income, and our financing business. We call them different things, but they will mean the most to people in the street, I think. Turnover close to $8 billion of securities a day. So 8 to 10. So the ASX turnover is around 8. We're generally 20% of that in Australia.
Wow.
Similar in New Zealand. So we've got the biggest market share in Australia comfortably. And then obviously there's huge turnover in swap markets, short-term interest rates, anything to do with the front end of the curve. So it's busy, and then there's the options, equity options. There's 22 different risk buckets that we run on the floor that you're about to enjoy. So it's busy. It's busy from the get-go.
Well, on risk, I mean, that's a hell of a lot of responsibility, not just the client funds, but the sort of genuine scale of the market that you also look after.
Yeah, I mean, we've got a great team. We've got terrific risk systems. We've got an embedded focus on risk behaviours and culture, which everyone's probably going to say, but we're very focused on that. Having the market share we have, we get a lot of attention, as you'd expect, from different industry groups, and we're very aware of that. And being part of a global business, a Swiss global business, the starting point is a conservative one, balance sheet protective, and we basically build a business around that. So big focus on risk, big focus on risk-adjusted rewards, and a huge focus on clients. So those three tend to come together pretty quickly each day.
Mike introduced us to his colleague executing currency trades on the floor. Hi Rita, how are you?
Good. Rita Alkazi.
Madison, nice to meet you.
Nice to meet you.
Now I hear you work on the FX desk?
Yeah, I do, but I also run, our sales department down here. So
Amazing.
that started in foreign exchange. Yeah.
Wow. What's demand like from clients for FX at the moment?
Oh, it's very, very topical. I mean, with Trump and everything that's happening at the moment, phones are non-stop, and clients are really interested in how to combat the currency moves that we're seeing.
How to play the Trump trade, right?
Exactly. Well, if there is one, no one knows exactly what he's doing. So whether or not it's a trade or not a trade, it's baffling a lot of investors.
So you're a busy woman.
Yeah, I've been busy. We're a busy team.
Yeah. Oh, so nice to meet you. We'll let you get back to it because I wouldn't want you to miss a call. So thanks, Rita. Nice to meet you. Everyone here was clearly hardworking and extremely polite, but there's signs they still have fun in finance. Someone's birthday recently? Is this where Friday drinks are?
Arguably, this is where Friday drinks are, in this corner, to enjoy the view and relax into the weekend.
Is that like the minute the market closes? It's like 5:01, depending on which market.
No, it could be 4:12 actually.
On the dot, I love that. People may have in their mind sort of Wolf of Wall Street, Stratton Oakmont when they think of like a Wall Street trading floor, right?
Yep.
What has changed throughout the decades that you've spent in trading, but what has also really stayed the same?
What's changed is society, to start with. I started at UBS 30 years ago, and the joke was like advertising or marketing were the edgy sectors of work, and finance was a bit boring. So, I think society's values have changed, and definitely finance, I would say, has been ahead of that, but it depends who you talk to. It's a far better environment, there's no doubt. It's far more, I wouldn't say respectful, it's just a reflection of society. So I think, we've all seen changes in society pretty significantly for a good, for all the right reasons. And I think the work environment's reflected that, and we're very aware and focused on that. The technology changed everything, there's no doubt, and we're a huge embracer of that. We've just rolled out 117, co-pilot licenses to staff in our team.
Oh wow, so they are adopting AI in trading?
Yeah, absolutely. Well, trading and sales. The financial services business, or the global markets business that I'm responsible for, is absolutely, and clients demand it. It's a necessary focus, and it's an efficient thing. everyone I was at a conference last week, and the big question was, is Chat GPT or artificial intelligence going to take my job? And the right response is, it won't. But someone that doesn't adopt technology, their role will be at risk with someone that understands technology. So it's just upskilling yourself on the next, technology step.
On efficiency with AI, how big of an efficiency gain have you seen in your team since they've adopted things like Copilot, or are you still sort of yet to see that play through?
Well, you see it pretty quickly, looking at the bullet points from a 1 hour meeting. It's an incredible step up in efficiency. I think we're still grappling with how we monetize it, and I think that's the challenge. I think it makes what we do more efficient and quicker, which is great for clients. I can't see people paying for that improved efficiency.
It's just expected.
It's expected, and that's we're in the service industry. So, I mean, the other part of that discussion is around how it improves our trading technology and how it makes us better at what we do around managing risk.
On that, do you think it will ever get to a point where your team are actually using AI to make decisions for clients, or will there always be a layer of human making that?
Oh, I'd say the latter, only because regulators are very focused on AI, understanding it, and having the appropriate overview of that technology. I mean, we have endless amounts of regulators around the world that we adhere to, and that's a very topical discussion around how regulators.
All of this speaks about the pace of decision making, of just everything that you and your team are, from however early in the morning right through to the market close in certain countries, right?
Yeah.
This also is representative in the news flow.
Yep.
Like what your team is having to absorb constantly, and the places it's coming from now.
Yeah.
It's no longer probably just a Bloomberg terminal and coming through their screen from central banks and economic data. It's coming through X, right?
Yeah.
How are you handling and navigating that, and what are you taking with or without grains of salt at this point?
Yeah, I think often your first reaction isn't, often your first reaction isn't the right reaction. It's an emotional reaction based on something you've seen. Is what you've seen accurate and verified? That's the other real focus, I think, on intelligence and the accuracy of it. So generally we'll need things verified before acting on them, particularly for clients, orders are involved. I mean, you're responsible for executing someone else's investment intentions. It needs to be done appropriately and with all the checks and balances in place. So we're not about to risk that on the sake of an X headline. Yeah.
When it comes to clients as well, I imagine now you're dealing with far bigger passive and also active firms that when they make a move on a market, it can be so market moving because of the size of them now. And if they're passive specifically, they're emotionless in a way.
Yeah.
Whereas then on the other side of that coin, you have the retail investors who are often hyped up by that news and are very heavily relying on emotion.
Yep.
How have you viewed that structural change, and how are you navigating that?
It's fantastic.
You think it's a good thing?
Well, you need different emotions to make a market. If the whole universe was passive, it would be a VWAP order over 2 days into the month end or whatever it was. You need different investors, whether they're passive investors, active, hedge funds, quant funds, to provide liquidity. So I think it's like the business. We talk about diversity. If we don't have a diverse business with a number of different risk buckets and everything's the same, we probably won't get much done. So I think the diversity of your client base, the different investment intentions, timelines, managing your own money versus someone else's, your different benchmark, it's all really important. So, there's been huge swings in how funds are managed, like Australia and New Zealand, 2 great examples. Legislated super. So the funds under management is growing at a ridiculous rate. So the investable universe in Australia and New Zealand aren't big enough for the funds that are being, it's like a fire hose. So, that's a good thing because it enables us to look at investment opportunities offshore, different investors, different drivers. So your passive investor I don't think we'll have a problem.
On the passive investors, what's their desire around block trades? Because they are so big and they can be so market moving with the size of what they're purchasing or selling, do they have more of a desire to do deals with you and your team in private?
Oh, it depends heavily on the timeline, the intention, the outcome the clients want. It's, we've got 6 different platforms you can execute an equity order on. So it depends on the commission you want to pay, the speed you want the trade executed, how big the trade is, how discreet you want to be. So as a 20% market share, we're Swiss, so we're discreet to start with. We can keep secrets better than anyone. If you want to move a decent line of liquidity, UBS, in my view, is the obvious house to go to, because it's hard to see a high volume trade when UBS is involved, when you're 20% market share. But again, some clients don't, that isn't relevant to them. So yeah, every client's different, which is a good thing. And the market is pretty deep and liquid, and there's a number of different ways you can execute an order. So if you need something done now in huge volume, that will involve what we call our facil desk, where we take principal risk. That's probably not the cheapest way to get it done, but it gets what you want done.
Well, say in that instance, if somebody does want to be discreet in an order and they effectively use one of your dark pool options, how is UBS then contributing to price discovery? How are you ensuring that there's the balance between executing what a client wants, perhaps in private, but also ensuring that there is public price discovery for retail investors?
Yeah, well, there's rules around all of that. So every order we execute is within the rules that the ASX or NZX stipulate. So that's absolutely, I'd say, microscopically overseen. So that's an easy answer. That's not debatable.
UBS facilitated the largest block trade in New Zealand last year, the second sell down of the Auckland Council's $1.3 billion Auckland Airport stake. Mike introduced us to the guy handling those huge trades, and something about his name sounded familiar.
Tommy T, have you got a second?
A Kiwi!
Yeah, I know. Tom, this is Madison.
Nice to meet you, Tom.
Tom Tepper.
Tom's family hails from the Waikato. Now he's facilitating some of the most significant and secret stock trades in Australia. So what do you do here?
So work on the equity side and sort of block trade transactions, which is large sort of blocks of stock. We source and negotiate them sort of privately and try and put a little bit of commission in between it. Yeah.
Clip the ticket, I like that.
Yeah.
What's the threshold in terms of size for something considered a block?
It'd be sort of $10 million or more than a day's average trading volume. But there's also sort of special situations, sensitive clients, sensitive situations that we get involved in as well.
Where someone wants to be more discreet.
Yeah, discreet, or clients who where the transaction would be to cause too much market impact to be public. So that's sort of a material, non-public information kind of thing, like wall crossing you might hear. So we do that stuff as well. Yeah.
So you have to keep a lot of secrets in your gig then?
A little bit. Yeah.
You're a vault.
Straight face,
Poker face.
Yeah. Very much.
Do you mind me asking how many of those trades you're doing a day? Like how high volume are trades of that size that can be market moving?
Australia's pretty unique, and that's a big thing. Like I was in Asia before this, and it's not a big thing to do these sort of transactions at price in large volumes. They sort of trade larger things in the market because there's more liquidity there. The market might see anywhere between sort of 5 and 10 smaller blocks a day, and then the large ones might be once a week or once a quarter or once a month.
And they're your favourites, I imagine?
They're the big ones, yeah. They're the ones that really matter, and you sort of have to get it done. Pretty. It's always competitive, so you have to do the right thing quickly and compete with all the other banks out there. Yeah.
Do you mind me asking the biggest block trade you've done?
It's about $262 million. Yeah. I was just on the desk. Yeah, it's cool. Yeah.
How quickly did you facilitate that? Hours, days, weeks?
No, it was probably 2 to 3 days. 2 to 3 days. We work on it for a little while, and once you get some inertia and momentum, it happens pretty quickly.
While they execute the big end of town in here, the smaller trades could be the trickier ones to facilitate. Is that more difficult to kind of execute the right or good price for something like a small cap?
More difficult, but it's, no, I think, like there are...
There's always a buyer and seller,
There's always a
right?
buyer
Yeah.
and seller, and I guess there's less liquidity around small caps. But no, I don't think, like we've got a dedicated small caps team, great analyst, a dedicated sales guy that covers that sector, and I think so does half a dozen other banks. So I think small caps, the other thing is, I guess if you're in small caps, you're looking instinctively for more significant moves in price, performance-wise. So I think investors in different sectors are pretty au fait with, you know, the challenges or the price discovery. They may have to pay more commission. Yeah, I don't think it's a challenge.
These big buyers and sellers, what is the information that they're paying most attention to? Is it something like earnings, or is it perhaps other things that they're watching to act upon?
Okay, well, firstly, it's the first thing I'd say that it's very much Trump-related tariffs, cross-border geopolitical, and then you'd move to outright sort of sector moves across the 27 odd sectors we cover in Australia. That gets a lot of focus, and then it narrows down to analytics around rebalances, and again, that's more sectors or which stocks are moving in and out of a sector, and the impact that'll have on that index.
On just what you and your team do more generally, what do you think is like a common misconception that, say, a retail or street trader may have about what you're doing here?
A misconception? I think maybe we don't do many lunches anymore.
Anymore, that's something that's changed, to go back to the first question. That's a shame
Well,
for you.
I think, as I said, I've been at UBS 31 years, and I think I'm probably working harder now than I ever have. So I think that's possibly changed in terms of people work very hard in this industry. It's if there's a misconception, there's a perception that they don't. That is hugely. I mean, that's the other thing that's changed in 30 years. I think people work harder now than they used to. Most colleagues have got partners at work. So I think it doesn't matter what industry you're in, people are generally working harder. It's still vibrant and very adrenaline-y. Like there's still healthy discussions, let's say, and raised voices. Everyone's very focused on not making a mistake, which is natural, but I just think that, you know, through the different economic and regulatory cycles we've had, there's far less tolerance, I suspect, in finance from a regulator's perspective as to behaviours, mistakes, multiple oversights, and that's a real focus of ours.
Well, that's kind of sums up that it makes it really tough to trade right now. Like, you have the pressure that you talk about, the eyes of regulators, also the pressure of not taking on too much risk, something that Credit Suisse has found out all too well in recent years. And then you have the vibrancy, as you say, the culture. Burnout, I mean, there's talk about this in the US, certainly Australia as well. I mean, why would somebody want to be a trader right now?
Well, I mean, traders only represent a small portion of our business.
The rest is research and assessment.
Oh, research and sales traders
compliance.
And advisory sales, and it's I'd say traders maybe represent 15 to 20% of our team. So I'd think balance, to your question, I'd say balance is important. Don't be defined by whatever you do, whether it's finance or marketing or advertising. It occupies quite a lot of your time, but I wouldn't be defined by your job, and I'd make sure you've got plenty outside of finance, if that's it. I mean, finance is, I would say, an amazing career to get involved in. I'd do it again, without a doubt. The middle of our 5 kids is interested in it, and I think she'd be great at it. So I'm very supportive of that. And there's probably 40 jobs on our trading floor. So it's very variable. and we move people through different roles all over the world. So it's pretty cool. I worked in London 4 years. It was the best 4 years of my working career. I'd encourage everyone to travel. And young people coming in the industry now are very confident around moving roles. 30 years ago, that was not the case. And the industry and management support that. So, yeah, I think the industry is better now for people to get involved in than it ever has been, frankly.
Given that so much has changed and technology is changing from here so rapidly, especially with AI, what would you recommend somebody wanting to get into finance do? Where do they begin? And is CFA even the correct kind of piece of paper to get now?
Yeah, it's a good question because we run pretty aggressive cadet and grad programs. So we've got young kids coming straight out of year 12 as cadets, which is pretty daunting. We see a whole range of, I think something computer literate is pretty helpful. So, you know, engineers, something that involves thinking. So engineering is problem solving. It involves math. I think that's pretty attractive. You know, we have a lot of commerce graduates, business, your traditional accountants, business, commerce. But I think something with some bent around technology is helpful and open solution thinking.
Can't say I'd ever do it, but I'll give you a call if I ever change my mind, Mike. Although I'd probably fit in, the average age in here is the same as me, 29. And UBS is investing in its dealers, building a bigger trading floor in a new building right next door.
March 23, we moved here as an interim 4-year step to moving into the new tower next door. So they're building a new tower that will sit next to this. We're taking 7 or 8 floors in that.
Wow.
That will be cool. That'll be really cool.
We'll have to come back and film that,
Mate,
please.
You should see the plans. It's exciting. So, yeah, if I was at uni and I was seeing the plans for the new dealing room, I'd want to work here.
As we let him get back to it, his team gave us this exit. Why you were clapping? I'm told this is what happens if you strike a big deal. So probably the first and last time I'll experience that. Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.